Hi, everybody. My name is Nitai Barzam, and I'm the Chief Operating Officer at nsKnox. I have many years' experience in cybersecurity and enterprise software, and I'm working closely with finance professionals like yourselves in securing their payments against cyber-enabled fraud. And for today, in the next 30 minutes, I'd like to share with you some experiences and insights about this huge and growing problem of payment fraud. Talk a bit about the significant business impact that it has on organizations like yours. Get a bit of the fraudsters' perspectives and how do they do this, and then end with some top strategies on how to fight payment fraud. So let's start with what we're seeing in the market. First, we can ask ourselves, who's the target of payment fraud? The short answer to that would be everybody is. And if we look at some statistics, then the Association of Finance Professionals is telling us that about 4 or 5 companies fall victim to payment fraud. And if you're a large organization making more than $1 billion a year, then you're in a worse spot with chances of being impacted by payment fraud coming almost to 9 out of 10 companies. And I suspect many of you sitting here with us today have experienced payment fraud in one way or another. Now, when fraud actually happens, what is the impact? Well, it is extremely significant, not only in terms of the number of organizations being impacted by payment fraud, but also in terms of the revenues, and not only revenues, also reputational damage, audit committees, and what have you. In fact, there is an estimate that about 2% of the global revenues are being stolen. Now, this is mind-boggling. And if you start thinking, well, maybe 2% in average is not that bad, just remember that it's not about the average. It's about the single incident that may hit you that contributes to this average. And we've definitely seen some fraud cases that have exceeded $100 million for a single incident. So the damages are extremely significant, both in terms of the dollar amount or the money related to it, as well as damage to your reputation, and oftentimes also personal impact to specific people that were involved in incidents like this. And how do fraudsters actually do this? Well, there are multiple ways fraudsters are able to do that, and we typically call them attack vectors. I'm not going to deep dive into each and every one of these attack vectors, but we typically split these into 3 groups. The first one that everybody talks about and everybody knows is known as social engineering. This is everything that fraudsters are doing to try and trick your employees. This includes all types of fraud, like supplier or vendor impersonation, like an executive impersonation. I'm sure most of you are familiar with email account takeovers and with simple phishing emails, but this has evolved and now includes more sophisticated methods, business email compromise and the man-in-the-middle attacks, but also starting to use the phone with advanced technologies such as phone number spoofing, phone hijacking, and even deepfake AI-based voice cloning, by which you may receive a call. The caller ID would actually seem like it's coming from somebody you know, maybe your manager or an executive in a firm or maybe a supplier. It's actually going to sound like that person because his voice is being cloned and it may be giving you instructions to wire funds to the wrong direction. So it's no longer just email, and it is also voice-based social engineering these days. The second group of attack is cyber attacks. And we've seen this one growing significantly over the past few years, and even more so during the COVID pandemic. At a high level, this is based out of 2 different strategies that fraudsters are applying. The first one is designed to steal your credentials. And we're seeing a lot of different email-based and other methods by which fraudsters are gaining access to your credentials. And once they have your credentials, they're actually using it to penetrate your email systems, your finance and ops systems, and update details, quote unquote, on your behalf, but effectively manipulating the data. And the second group has to do with targeted malware, malicious software, Trojan horses, all these type names, which are specifically designed to target certain ERP systems, finance and ops systems, and manipulate the data as well. And the third group is the one everybody hates to talk about. This is the insider fraud problem. Bad insiders are best positioned to attack your systems, to attack your processes, because they know these processes best and they know how to bypass these type processes. In which case, they may gain access to your system simply using their own credentials and covered your tracks later, or they may even be accessing the underlying systems, like the database that contains account data, manipulate data at that, and the end result is data in your systems is manipulated. Let's look at some examples. So the first one is for social engineering. And the story here, Mike, if you could help me, there's a pop-up. Yeah, thank you, Mike. And sorry about that, folks. Technology is great when it's working. So let's get back to the example of social engineering here. Well, the story involves 3 companies. One of them is Quanta Computer out of Taiwan, maybe less known than the 2 others, being Facebook and Google. And the story involves fraudsters actually hacking into the Quanta Computer email system, sitting there for a while, studying communication between Quanta Computer as a supplier of electronics into Google and Facebook. And once they've learned communication, they've learned the different parties involved, they've learned the details, they started changing communication, essentially playing man in the middle between Quanta Computer and Google and Facebook. And you can imagine what were the details that they were changing. They changed the banking details, causing Google and Facebook to update the banking details for Quanta Computers that they had in their systems. In turn, Google and Facebook paid fraudulent accounts instead of Quanta Computer. And this, folks, lasted more than 2 years, during which more than $100 million were sent from Google and Facebook instead of to Quanta Computer to fraudsters' account. So we have something really interesting here. The fraudsters were really smart around what they were doing. They did not take all the money. They paid some of it to Quanta Computer. And by doing this, they were able to make this last for more than 2 years. The other interesting thing to note here is that for Google and Facebook, this is what we call accounts payable fraud, because they paid the wrong accounts. But from a Quanta Computer standpoint, this is what we call an AR fraud, or an incoming payment problem, because they did not receive all the money. Now, who's to blame? Is it Quanta Computer that had their email system hacked, or Google and Facebook for not doing the proper due diligence and checking the banking details that they were instructed to change? Now, Google and Facebook are definitely not alone with that. The FBI is actually reporting that in the past 3 years alone, $26 billion were reported as lost to payment fraud. And this is just the number of dollar amount that was reported stolen. The estimation is that this is only 15% of the actual amount. Moving on to another example, this one is for cyber attacks. First, we all think that we're pretty secured around our systems. This is IT's role to take care of that. They secure the systems. However, if you look at some data shared with us by IDC in a survey that they've conducted, they actually tell us that about 2/3 of the companies surveyed have admitted to having their ERP systems breached over the past couple of years. So you think you're secured, but 2 out of 3 companies admit to having a problem with that. This is really interesting, and it can happen to anyone. And if you look at the example on the right-hand side, this involves a company out of Australia called the Vitas Capital. And what happened there is that one of their executives joined a Zoom meeting, or what he thought was a Zoom meeting. He entered his credentials over there, and according to reports from MBN, he actually gave his credentials to cyber fraudsters, which later used these credentials to affect payments of $8 million out of the Vitas Capital, which at the end of things here resulted in with Levitas Capital going out of business, having one of their main investors no longer support the company. So cyber fraud really happens and could be very impactful. The next example involves insider fraud. And again, if any of you thinks, hey, this is not a problem, I want to trust my IT folks, I want to trust my finance professionals working with me, then you may want to think again. A study published by PwC in 2020 has indicated that about 50% of the economic crimes conducted were actually committed by insiders or with the help of insiders. And the story on the right-hand side demonstrates this. This is with a company called ABB, a Sweden conglomerate working globally. And in fact, one of their executives in Treasury for one of their subsidiary was able to steal $103 million out of the company and vanish, never found, the money was never recovered. And the interesting thing about this case is that, again, this involved both an AR and an AP fraud. On the one hand side, this executive instructed customers from ABB, to pay his own accounts, fraudulent accounts, instead of ABB. And on the other, he used some fake suppliers, fake invoices, bypassed the process, bypassed controls, and paid his own accounts instead of these suppliers, resulting in with $103 million. So when we look at, the statistics, when we look at these examples, we ask ourselves, how come? This is not a new problem and it's still escalating. Why? And we've analyzed this with our customers, with our business partners, and a few things come up. Organizations, for the most part, are relying on manual processes and training, while the attackers actually leverage state-of-the-art technology and psychology. And humans are, after all, humans. We don't always follow process, and it doesn't have to be a bad insider. It could just be a tired employee or someone who got distracted. And even smart people can be tricked by the very sophisticated scams. We could do a great job many, many times, but it takes one mistake to fall victim to fraud, and there you go. In addition to that, technology-powered attacks will bypass control. You can validate account information on the input, but later, if data is changed in your ERP system or in your payment file before you actually process, then you will fall victim to fraud. And this actually brings us to a very important observation. Organizations today have some internal gaps between the different units. On the one hand, we have you guys as finance professionals, and you're the experts in your financial business processes, whether you're in procure to pay or in order to cash. You know the handoffs between supply chain, the master data team, the finance team, but you're not always the expert around how technically fraud can happen, and definitely not on how to stop it with technology. On the other side, we have the IT and information security team, and they're like the flip side of this. They understand the technical ways fraud takes place, but they don't always know the details of the business process, the internal communications between the team members. And they're typically really stressed for time and for resources and budget. So they would lean towards the more generic data security solutions like antivirus, network security measures, and sometimes email scanning. But rarely will they have the capacity, the attention to implement specialized business process-specific controls and solutions. And when it comes to the processes of onboarding or updating payees, going through payment runs, this means a significant risk is out there and it could cost the organization a lot. And if we know one thing about fraudsters, they will take advantage of any gaps and they will slip between the cracks, leveraging technology to attack the business process. So how can we protect payments? Well, we believe that to solve this multi-layered problem, a multi-layered solution is required. And let's talk about that. The first layer of security is deal with infrastructure. And to do this, you want to collaborate with your IT and information security teams. You're going to sit together and review all the relevant processes and systems. And while today is not going to be a technical session, the one you're going to have with your IT teams will definitely be a technical session. Now, they're probably going to introduce multi-factor authentication, virtual private networks, especially when people are working from home. They will try and secure your email systems, and in general, try to increase the level of security your infrastructure has. Now, this is a good first step, but as the FBI director once said, there are only two types of companies, those that have been hacked and those that will be. And with that in mind, clearly we need to do more. So let's move into the second layer. And the second layer of security really involves people and process. You want to identify key processes and you want to adjust them and define enhanced processes that are more secured. And once you do that, you want to make sure you communicate that throughout the organization. And let's look at some specific areas of process, of focus around process. First, we want to talk about interfaces. Try to look at the people participating in the process, the systems involved, and definitely focus on handovers and on interfaces. Is it via email? Is it file exchange? Is it an interface between systems or otherwise? Look for any cracks that fraudsters may take advantage of, because they will. And remember, it only takes one interface that's not as secured enough for a fraudster to succeed. So think about it. If you're implementing great security measures and controls, but end up sending some sensitive files over emails or some sensitive data exposed, then it may be manipulated. Focus on the interfaces, make sure they're secured. Next, consider rotating employees between your headquarters and your global locations if you're a global company. This will strengthen communication, get the people in the different locations, know each other and trust each other. And once they're personally aware of things, they can share experiences. And this will definitely make it easier for you to enforce corporate policies across all regions and make it harder for fraudsters to put themselves between the different team members in different regions. The next one is the really important one. Don't rush. Fraudsters will typically create a sense of urgency. Do this and do this quickly, and we really need to send this money by tomorrow, or otherwise we lose the transaction or the supplier will not provide the materials. You want to be aware of this and make sure that you define your processes in a way that gives you the time to evaluate things and make informed decisions. For example, separate your supplier onboarding process and account validation processes from the actual payment. And to the extent possible, do not allow for payments to be made immediately after processing requests to change banking details. I recently talked to a finance professional whose company fell victim to business email compromise fraudsters that hacked into one of their suppliers' email accounts. And in this specific case, the supplier actually identified that there's a problem and the request is fraudulent. But by the time the supplier made a call to this company, they've already processed payment. So try to allow time between the different stages and don't rush. Next, I want to touch on education and training. We all know that risks evolves and employees, processes, systems, and tools, they all change. So make sure to educate, train, and audit employees repeatedly. Help employees to stay familiar with all the relevant processes and controls and any changes made. Make sure they understand the risk and they remain alert and vigilant. Next, you want to try and standardize and centralize. Well, I know this is not always possible, but when possible, it will definitely make it easier for you to monitor and control. Try to unify processes. Customize locally only when necessary and have the process in place to approve exceptions. Try to harmonize system and consider shared service centers. This will dramatically reduce exposure and make things easier to monitor. And finally, segregation of duties. Well, everybody talks about it, but are you sure you're actually always implementing this? You want to make sure that there is no single person that is able to complete more than one step in your process. You want to have multiple people in a single process. Make sure that each user have their own private login ID and they're not sharing it. Make sure authorizations are properly assigned and be methodical about it. Avoid single points of failure. This one, again, is really important. Now, good processes will definitely minimize the gap But always remember, these are processes, they're manual processes, and they involve people. And as the SEC is telling us, these processes are only as good as the people that follow the process. And sooner or later, someone will make a mistake. Someone may be forced or want to cut corners, and you can't allow that. And so to fully protect yourselves, you definitely need a bit more. And with so many known and unknown attack vectors, an end-to-end approach is required. You want to validate bank accounts to take care of the input into your systems. You need a secured and effective way to validate the details you receive to ensure you only enter valid data into your systems. But that's not good enough because the data could be manipulated when it sits at rest on your systems. So you want to make sure you continuously monitor your master data, you identify changes, and you protect it against any changes, whether coming or committed by insiders or outsiders. And then finally, you want to monitor your output. So you want to monitor and control the actual payment transactions, whether they go to the bank or to the clearinghouse, but definitely before you confirm them for processing, you want to make sure that they remain valid. So first, when we discuss validation of bank accounts, well, different organizations have different processes. Nowadays, for the most part, I am seeing organizations with processes, but you need to make sure that you go beyond review of documents and then trying to call the beneficiary, because both, unfortunately, are vulnerable to payment fraud. It's really easy to forge a void check or a bank letter, and with voice spoofing, phone spoofing, and voice cloning, it's also not easy to make sure you're speaking to the right person. Time zone differences, language barriers, trying to get hold of the right people could be extremely challenging. So you want to go beyond that manual processes and introduce technology-based account validation to validate both your domestic and international bank accounts when you onboard new beneficiaries or when you process these requests to change. Now, you want to make sure that this is technology-based and it relies on trusted third-party data, not on data received from the interested party. Just like if you're buying a house, you would not take the word of the seller that they're the owner of the house. You would want to validate that through a title agency or an external agency that confirms this for you. And if you do that, you're able to protect the input into your system and at a high level prevent social engineering. Now, given that once you've saved this data in your systems, it becomes master data at rest, and data at rest, as we know, is target for manipulation. And it may sit there for weeks, sometimes months until you're using it, which provides fraudsters, again, insiders or outsiders, the ability to manipulate data over a long period of time. So you want to make sure that you protect your master data on a continuous basis. Make sure you identify changes periodically. Make sure that you can automate this and have the process to understand why were changes made, were they made in compliance with the organization's policy. You need to validate the integrity of your master data on a continuous basis. And then lastly, before you send these payment transaction, or once you've sent them and you want to reconcile, you want to automate the scanning of payment transactions so that you make sure that these payment transactions actually comply with your policies for validation level and payment thresholds. Now, if we've followed all these steps that I talked about so far, if we've secured your infrastructure together with your with your IT and information security teams, if you've established best practice processes, if you're continuously communicating and educating your employees around this, and if you apply automation and technology, you've increased your security dramatically and you've reduced your reliance on the human factor. Now, all this together will significantly improve your ability to protect your outgoing payments. But what about incoming payments? Well, first, some of you may ask themselves, do we care about incoming payments? So let me ask you this. What happens if any of your customers fall victim to payment fraud? If a business partner you're working with is trying to send you $1 million, but is actually paying a fraudster's bank account instead of yours, is this a concern? Well, at a minimum, this will impact your cash flow, so definitely should be a concern for all of us. But what if this customer or business partner can pay? What if they're a good customer, they've just lost $1 million and they tell you, I don't have $1 million to pay? When you start negotiating discounted rate, this could actually impact your incoming, not just by cash flow, but also by the dollar amount. And even worse, what happens if the fraud actually originates from within your organization? What happens if it's your email account that got penetrated? Just like in the quantum computer story, who's to blame? What happens if one of your employees actually instructs any of your customers or business partners to pay fraudulent accounts, like in the ABB example that I shared earlier? And again, you may also be liable for the losses. So protecting your incoming payments or fund transfers is really important, but it's somewhat limited, right? You cannot really control their infrastructure, install technology on it, or secure it because it's theirs. You have very limited control if any of their processes. You cannot really make sure that they follow the right process to validate your account details. However, what you should be doing and can do is to look for some specialized technology that will help in the process. And what I mean by that is provide your customers and business partners with the ability to validate your account details and make sure before they save your details in the system and before they use banking details to pay you, make sure that they pay the right accounts. And while you may not be able to force them to do that, at a minimum, you can provide them with the ability to do that and learn if they haven't checked. Now, doing this requires, 3 steps. May sound simple, but you want to make sure that you're able to do that. First, you want to be able to register and validate your accounts so that they're actually stored in a secured way, cannot be exposed, but can be compared to by your customers to know that the details they have had, and if they've received a request to change your details, they want to be able to get into a secured location and verify that the details are correct. Once you've done this and your details are securely stored, you want to inform your customers that they can actually validate your banking details before they make payments to you or before they save it in their databases. And once they know that they can do that, they will now validate that the details they have for you are indeed correct before they store it in their systems and before they pay you. So pretty straightforward, but very, very powerful. And now, if you've implemented this 3-layer strategy, you've worked with your IT and information security team to secure your infrastructure, you've established some best practice processes, and you've applied this specialized technology, you could actually replace trusting that everything's okay with knowing that everything's okay, both for your outgoing payments and your incoming payments. And with that, if anybody has any questions, then I'm happy to take them. And thank you for your participation.